Hi guys, quick update here for the stock market and for Bitcoin. It's Monday 7th of November 2022. Just before we start, if you want to join the group, everything's here. Educational courses as well as a mortgage amortization course. We will be getting a part 2 to that at some point, probably Easter summertime 2023. Now, obviously a big caveat with this video here that we are doing today, around about 7 a.m. Eastern time, is that tomorrow we have the US midterm result. Last time we had a YouTube video, we were sort of here and we said we were going to be doing some kind of corrective leg, some kind of wave 2. There is still the potential we could get a very big sell-off here going into the end of the year. I'm of the opinion it's an ABC basically, right? So that's just a 1, 2, 3, 4, 5 waves in the C, and we're now forming potentially a 1-2-1-2 setup. Maybe we end up retesting 381 before we come down in the third of the C leg. If there's something more going on, potentially this correction is not over. Maybe that is just an A leg. That's some kind of A, B, then a bit of a trappy sort of B. Then we end up going in a C, and then that's your wave 2. Then we come back down. Of course, if this drags on a little bit longer, potentially it's not a wave 2 and it's more of a wave B. But regardless, it's more of an ABC, and so the whole structure is a WXY. I don't really think it matters whether we're dealing with a more complex wave B or a simple wave 2. I think this market is going to sell off here, and we do have the potential to still, even though there's only 7 weeks until the end of the year, a lot can happen. Here, we had the biggest, fastest crash in human history in 35 days. So it's 30% in 35 days. So forming a V bottom is very much typical with how the S&P moves. None of this is capitulation. This is not capitulation, neither is this, neither is this. So, and people have actually got very, very bullish here, surprisingly, given how awful this chart looks. On the Qs, it's about 200, I'd say, for the target. Once again, you know, either we're just going to come straight down here, that's the 2. If not, that's the 5, that's the A, B, maybe another retest around 284. I wouldn't be surprised. One more bull trap. I mean, there have been a lot of bull traps here. We've had about 1 million of them. 1, 2, 3, 4, 5, 6, 7. You know, there's been about 10 bull traps here in the last year. None of them have been proper moves up, though, have they? They've all just been fake rallies the entire way, as is typical with a bear market. The most convincing, most vicious rallies to the upside do occur in a bear market and not a bull market. You have to love the irony of that. Maybe an ABC. Then we have 1, 2, 3, 4, 5. That should get us to about 200 on the Qs. I don't think the Nasdaq is done. We're still looking at lower here. So we do still have low targets here. You know, these are 100% probabilities. Some of these Nasdaq stocks still have lower to go. I think commodities are still gonna perform. One of the spreads which we've been looking at since the start of the year is the outperformance of XLE relative to XLK, and the fact that this is going to hit 1. So I think there will be a big rotation almost certainly before March 2023. The commodity rally that we've had in Exxon Mobil, BP, Shell, Chevron, they've all hit their targets. They've all pretty much made all-time new highs. I think there's a little bit more upside here before we get a big rotation back into tech. And Bitcoin doesn't follow commodities, obviously. So we're looking at that to go 1. I think it makes a good headline, and then we should get some rotation beginning, because some of these tech stocks are looking very, very tasty. That's probably some kind of A or 1, B or 2. Maybe that's the 1, 2, 3, 4, 5. Maybe that's it. Or we flag at 1, make one more push up to around 1.2, 1.3, and then we get the big move into tech. So, you know, it's not been very good for tech stocks, basically. Now, let's just quickly go over some of these stocks. I mean, this is just, I mean, that is a ridiculous chart. That was how we left it, you know, 3 weeks ago. It's done nothing to convince me anything other than it's on the edge of a cliff, this one here. And that's going a lot lower. They're coming after Apple now, finally. I cannot believe it's held up so well. You know, we have some big issues here. That is on the edge of a cliff right there. You know, there's absolutely nothing here, you know, other than the gap at 100. which isn't the target, obviously. The target's 88 followed by 66. 66 is a near all-in situation on Apple. This has a long, long way to go. You know, once again, we've had this sort of A, B, C kind of count where that's the A, that's the B, that's the C, and as part of that, that's the 1, that's the 2, 3, 4, 5, and now we're just doing another one. Right? So we're like, what's his name? DJ Khaled, is it? Or is it Fat Joe? So we're doing another one here. So it's a 1, 2 followed by another 1, 2. So Apple could squeeze here, maybe 142, but it could just roll over at any time. So there's a lot of problems here within this stock market, and one day before the US midterm, probably not the best time to do a YouTube video here because everything could change. I get the feeling this market wants to roll over here into the end of the year, following which, point, once it gets down to here, then things become very, very interesting, and the risk to being short is very, very high, and the risk to being long is very, very low. And that's ultimately what it comes down to. Risk and reward, basically. Now, can we have a look at crypto while we're here? So what has crypto really done the last couple of weeks? Not a whole lot. We've, triangle possibility. There's an ABC here. Getting too much into the short term, I don't think is really relevant here. There's not any clean price movement here. This was what we had drawn last time. There are 2 targets down here. There's 12.6. But before 12.6 is 14.3 to 15,000. Nothing really has changed here. It doesn't really matter what we're dealing with. Some kind of complex correction, a WXY. This is a waste of time. There's no point even looking at this really. And the volatility is at an all-time low situation. It's an end-of-day index, but what I find really interesting is it's historically the lowest ever volatility, certainly since I've been doing YouTube videos, and that's very interesting because it makes me think of October 2018. Now, what occurred in October 2018? Well, this happened. I recall this like it was yesterday. Everyone was saying it's a 6-month accumulation, and we dropped from 7k to 3k as I had forecast. So, there's people out here who think the bull rally has already started and we're here somewhere. January 19, February 3k, going for that 14k moonshot. Obviously, that would be the same as, let's say, people calling for, let's say, 20, 30, 45k Bitcoin, followed by the move down. But I still think we're here. I still think we're sort of like October, November 18. Literally, this time tomorrow, this entire market could be down, 5, maybe 10%. So it's a very big day tomorrow, and we'll have to see the reaction to the US midterms. But I do find it interesting. We are at historically very low volatility on crypto, and of course, that can't go on for too long. Contraction of price and volatility, it's like a coil spring. We're going to get a huge move here. The question is that move going to be up or down? If I just pull up the 3-month chart, does this really look like this? Or does it look more like this? July, August 18, right? Because I think this looks like this. This is like this. There's one more big candle like this to come. One more giant candle out of nowhere. And then we bottom. Then we have some kind of rally. Then we say, okay, is that an X wave? Is that a B wave? Is that a wave 2? Is it going to truncate here? Form some kind of WXY? Is it going to come even lower than that? That's when we have to investigate. But here, short term, I'm of the opinion it's more here rather than here. Anyway, let's go into some of the coins here. So obviously Dogecoin's had quite a nice little pump here. I did say in my last YouTube video, the higher this goes, the more people are gonna have issues here. I mean, I can count 5 waves complete into there, so perhaps we've already, there's definitely a clean ABC sequence here. That's an A, that's a B, that's a C. So Dogecoin, you have to ask yourself, is that really gonna, is that a 3 and then a 4 then a 5? I don't think so. So it looks as though this entire market, stock market included, is probably not going to do anything today. Very, very big day tomorrow. The first move is often incorrect, just like it is with any other result or decision which gets, called. Federal Reserve, CPI. The first move's always fake, just like we found out with the interest rate. The first move was up, and then half an hour later, 200 points down on the ES. So that looks like an ABC to me. I think Dogecoin can still go to 1 cent. We have a few other coins there. Obviously, we're not going to go into all of that today. Some of these targets still haven't been hit, which I'm not happy with. And we do have some leading indicators here, which I won't share right now, but none of the targets have been hit. So I'm not too happy to call a secure low in the crypto market until at least we're past tomorrow. And on top of that, we get more clarity and resolution to which way this wants to break down. I find it hard to believe that this is all an accumulation. All of this. This could still be part of a complex ending diagonal fifth wave, which basically we get one more move down. And then once that move is done, we can then look at getting bullish. But, it's not worked well, has it? Owning crypto this year. It's basically like a TQs. That's the way you want to look at crypto. It's basically like a leveraged NASDAQ ETF. And NASDAQ stocks have been absolutely hammered. So that's my take. There's not really much to update here. I think the next big dump on crypto and on these tech stocks, they're looking very, very appealing. But, there's nowhere near ready yet. Nowhere near ready. We have a long way to go here. Long way to go. You could easily see 66 on Amazon. Facebook. This is very difficult on Facebook. I'd say there's a 30% chance we go to 0 here. I don't like how we're moving here. One of these stocks are going to go to 0. I always assumed it was going to be Tesla, but now I'm thinking it might be Facebook. So one of these big stocks are going to go to 0 here. So I think there's a lot of people who are trapped in Facebook here. Maybe we get a bounce 83, 81. We called that when it was here. Even on the last YouTube video when it was here, we called 83, 81. Anyone who's been holding puts this entire time, they're up like 50x given the move. But I think it's even worse now than 83. So Facebook really needs to bounce here soon. Otherwise, we've got some real issues. Maybe 83 is the A wave. Then we get a B wave. And then honestly, there's a gap down here. So Facebook is the worst, I think. This is moving like a Shopify or like a Roku or like a Peloton, but I would expect Peloton to go to 0. My expectation is Facebook doesn't go to 0. So, there's a huge gap down here. Why has this gap never been filled? I cannot believe I'm actually forecasting Facebook to go to 30. I can't even believe that it's at 83. The way it's gone down there, I thought it would have taken years to get to 83. So some big issues on Meta platforms over here, and I get the feeling one of these stocks are going to go to 0. In fact, I'm sure of that. I just don't know whether it's going to be Facebook now or Tesla. So both of which look awful, but Tesla's actually holding up pretty well in its head and shoulders. So there's still more pain yet to come. Unfortunately, these things don't really end until someone goes broke. So until we get a layman's Bear Stearns type of situation, maybe you're looking at it right now. Okay. Is anything else? SPY, Tesla, Google, it's just not ready yet. It's just too early for that rotation. You've got a long way to go here. Google's probably pretty close, but even if just take your simple ABCs, that's an A, that's a B. Very, very high volume here. We're in some kind of wave C or wave 3 here. Whenever you get the highest volume, you're in some kind of deadly kind of impulse here. The wave 3 or the wave C. I've got an interim target here, about 71. So it's not going to be a straight line. Of course, there might be a bit of a squeeze there. So there's a lot of issues in these tech stocks. And I think XLE divided by XLK, once that gets to 1, I think hopefully that kicks off a bit of a rotation. So I don't think there's much else to update. What else can we sort of speak about here? We can have a look at the pound, actually. So the pound, we call the low in the pound on the night that it occurred. So very high EQ thing to do is to convert dollars into pounds here. Very high IQ thing to do is to short the pound. So it shows the self-limiting nature of having a high EQ in this game. Anyone above 120 IQ never going to make any money in the stock market, not in the US market anyway. It requires at best 120 IQ. Too much intelligence is actually a bad thing, ironically. So yeah, I mean that could be 100-year low in the pound. So I don't think there's really much to update here. I think eventually it trades as high as here. We recall this Brexit move like it was yesterday. That was a huge move. There are obviously stops above there. I think it's very reasonable to say the pound's going to be one of the best performing G10 currencies. I've been saying that for the last 3 weeks. From that low, could easily be one of the best performing G10 currencies here going into, the next 3 to 5 years. I think 150 is pretty much programmed there. I can't imagine the pound falling back down again. The dollar, it's been a little bit frustrating here. Obviously, if the pound has bottomed, then that only makes up 12% of the index. The actual Elliott wave count is a bit of a mess. You could read all of that as just a huge double top pattern. Definitely you can count 5 waves into here, but unfortunately you can also count it as a bit of a wave 4, and then maybe one more push up towards 120, and then we get the big correction. So a lot of people I think are jumping the gun here potentially and saying, look, dollar's definitely topped, and well, I mean, the pound's definitely bottom, so yeah, definitely right on that one there. I would agree with anyone who has that opinion, but the pound only makes up 12% of this. 50% is the euro. So has the euro really bottomed? I don't really think so. So, people are moving into risk assets here on the presumption that surely bonds are going to reverse and surely dollar's topped. So tomorrow is a very, very big day. Everything could look very, very different tomorrow. This obviously looks very, very bearish, the way I'm looking at this right now, but that could easily turn into a bit of a hammer candle, and maybe all of this is still a wave 4, albeit a very peculiar one, and then maybe we still have that move up. So I think the dollar move is a little bit difficult here. There's reason to believe it has already topped, and the pound would support that view. However, there could still be one more move up here. I mean, what's the not even looked at this since 150. So what is this doing? Has it actually taken out 150? No, it hasn't. It's not taken out the 150 at all. So once again, this actually supports the idea that the dollar might have topped. So, but you have to look at so many things here. Even this only makes up about 20% of the index. So, yeah. Very, very important 24 hours. I think the dollar is difficult, though. I don't think one way or another you can really call a secure count on this, because there are two interpretations. Ideally, had it gone to 120 and made a 25-year high, then definitely you would have called a top there. So some people potentially jumping the gun here, buying crypto in the expectation that the reaction tomorrow is going to be good. I don't think it will, personally, and the dollar's topped, but it's got to be a little bit careful there, jumping the gun. Finally, bonds. What's this? That's the 20. What did I press there? That's the BMV, right? So we get it on the Nasdaq here. Yeah, I mean, it's not really done well at all, has it? I mean, that is the most ridiculous yearly candle I have ever seen in my life. That is just absolutely ridiculous. So worst year ever for a 60-40, which basically means come January the 4th, everyone who knows what they're doing will set up a 60-40, obviously, because the headline is going to be don't do a 60-40, so you do a 60-40. So surely come 2023, there has to be some kind of relief rally here in bonds. There is definitely going to be some tax loss selling here. There's been some heavy losses in this bond department. I mean, it's been awful. It's just unbelievable. I mean, I knew it was going to go to 100. It's just the way it's occurred has surprised me. This kind of move in the bond market should have taken about 5 years, and it's taken, effectively 2 and even less than 2. So very worrying signs here. You'd never want to see $200 trillion market moving like an altcoin. I mean, that's a yearly block down here, so surely bonds can do something at some point, but we might be looking at 2023 before we get that nice little relief rally in bonds. So I don't think there's anything else to really cover here. Yeah, I mean, this is also a bit of a trappy kind of chart here. So basically, we're reading this. I mean, initially, prior to all of this, obviously, I thought the S&P would have rolled over, but I mean, to me, that just looks like a WXY B wave, and it's approaching the top there. So, you know, there's still the potential this can roll over to below 10. So it's you know, very hard to be really bullish on this market here. If you compare that to the SPX, I've not done this before. I'm not sure if it's going to work, but so you see here, you know, it just completely rolled over here from around. I mean, there was weakness in this market going into the summer of 21, and here massive divergence there. We've made a new high on the S&P, and the MMTH is nowhere. So we've, you know, rallied here, bear market rally, then a move down, then another bear market rally. We've made a lower high here on the S&P, and potentially going to roll over here one more time. Once this gets below 10, that is really the signal for those who know what they're looking at here, to really jump into this market. You know, smart money are definitely looking at this, and you know, we're at 34.56. We're not at a level, I don't think, where smart money really wants to jump in to this market just yet. Certainly not in the tech sector or the communications. Right, let's get off that. So just to summarize then, obviously big caveat with this particular video here, it's 1 hour or 1 day as it were before the US midterms. The count which we're working, you know, basically just a same as the last video really that we've done here, which was here. There's still the potential of a very big sell-off. I know it looks really bullish, but everything looks really bullish until it moves down 20% over 1 week, and then obviously there's some issues there. That's a very respectful, very valid count. I don't like the lateral, the expanding diagonal count. I just don't like that. There's, you know, that could be that part of I just don't like that count. I don't like the ABC count. I don't like all of this as just a X wave, W, X, you know, Y, X, Z, X. We're just forming X waves. S&P doesn't move like that. And I also don't like the uber bearish count, which it's the 1 2 1 2, because then we go in 6 6 6, and I don't think you can make that call in an inflationary bear market. That would be unwise, right? I don't think this is the count. Although looking at many of the stocks, and if Facebook goes to 0, which I would say is now 30% probability, that could happen. But I don't want to make the 666 call right now because it's inflationary. That's the only reason I'm not making it. You know, as you know, property price is still pretty elevated here. They might have an issue in about 6 months' time, but you know, things are still. You know, monopoly money has entered this market over the last 13 years. That kind of money doesn't just go away. Hangs around for a little while, like years. So I don't think you can make a 1 2 3 4 5 call. So I don't want to be really bearish 1 2 3 4 5, and I don't want to be not bearish enough. So I think the ABC count is kind of like your count in the middle, where you're not super 666 bearish, but you're more like sub 3k bearish, then a very nice rally going into next year, and then obviously we can reassess the count. This market has been very difficult at times to navigate. So but regardless, 1 2 3 4 5 ABC down. The count is the same, obviously, because the third leg and the C leg are effectively the same thing. This seems too much of a coincidence that they're setting up a 1 2 1 2 setup right into the US midterms. So is there anything more to add? Maybe I'll just end with a potential bullish scenario. I mean, I just don't like the bullish scenario looking at Apple. It's at 135 as I'm speaking here. So, yeah, I mean, like I said, maybe that's some kind of something like that. They just, you know, drag this US midterm result a little bit longer, and to like the end of November, Thanksgiving, then they dump it. So they might do something like this, right? So it might not immediately dump. But the count does suggest something's not quite right here. And we've not had capitulation. So I think a lot can happen here going into the end of the year. And 7 weeks in the S&P is a very long time. I'll catch you guys soon.